Okay, everybody, it's me, Gregory Mannarino. It is Thursday, May 26, 2022. Let's start off with the economic news that we just got this morning. Kind of a mixed bag here. I don't know where to start. I guess we'll start off with the good news. The good economic news that we got today is apparently first-time unemployment claims came in better than expected, which is a good thing. Honestly, whether this data is real or not, who freaking knows? That's honestly the truth. But it's good to hear that people are at least getting employed or not claiming as much as was expected. This number came in at 210,000. They were expecting 215,000. Now, this is where it gets a little ugly here. So first quarter GDP contracted, gross domestic product here in the United States, contracted faster than expected. Not for you and me. We realize what's going on here. The economy is dead. I don't know another way to put this. It's dead. And this is a global phenomenon. This is by design. This is central banks who are doing everything in their power and then some to make sure that the global economy remains dead because they are determined to become the lenders and buyers of last resort. You know that. So, with that said, let us move forward here. So first quarter core inflation numbers continue to surge. Really? I'm so surprised. Well, hold on a minute. The Congressional Budget Office of retards, yesterday said, oh, inflation is peaking. I guess they got that one wrong, huh? Oh, imagine my shock. Again, people, the distractions, the lies, the deception, the propaganda, it's out of control. It really, really is. And lastly, we found out this, that our economy, here's more proof, is dead. And how do we know that? The rate at which cash is moving through our economy is, again, near historic lows. You cannot have, should make sense. Think about what I'm about to tell you if you're new here. You cannot have an economy that is improving in any way, shape, or form if cash isn't moving through it faster. And that's what's going on here. So possibly one good piece of economic news, jobless, first-time unemployment claims coming in better than expected. But then we get, again, first quarter GDP, it's contracting faster than expected. No one saw that coming. Inflation continues to surge, and money velocity remains pretty much at dead in the water as well. But everything's great. It's fantastic. You know that. How do you know that? Because everyone's telling you this from the mainstream channels. Anyway, despite this, stock futures are higher across the board, okay? Stock trading doesn't start for about 29 minutes. It looks like stocks are going to bump higher at the open. 10-year yield, people, 2.75. Crude oil catching a bid here. And the dollar is weaker. So the setup for the market this morning is not terrible, okay? But we need to keep our eyes on that 10-year yield. I don't know another way to put it. So we're at 2.75. All right. We've got, this market seems to be in, again, I hate calling tops and or bottoms. It looks like it's trying to bottom out here, okay? Is it going to last? Are we going to fall through? The key is the 10-year yield. The key is the 10-year yield. I don't know another way to put it. I'm going to beat this to death. So keep your eyes on that 10-year yield today. For example, so we got stock futures higher right now. 10-year yield 2.75. If you see the 10-year yield dropping, 2.73, 2.72, that's not a good sign for equities or stocks. Okay, if you see that 10-year yield bumping higher with the futures higher, that could mean a nice big fat rally today. So we need to watch that. We also need to watch the comparative strength of the dollar. It needs to stay weak. All right, that's really the truth. We already know the dollar is a dying asset. I'm talking about its comparative value to against other currencies here. Crude oil getting bid higher here, WTI. This is what the market wants to see. You know that. Period, the end, and it's going much, much higher. There's just no doubt about it, at least in my mind, and I would be willing to bet in yours as well. I've said this a million times, but I want you to understand. Crude oil remains the lifeblood of the military-industrial complex. It is the lifeblood of the markets. The major banks here who finance all of this stuff here, with crude going higher, they're gonna want to play. I told you that's another key here. Banks have gotten decimated as of late. Okay, we need to see the banks play. That means getting bid higher. We need to see the 10-year yield moving higher for this market to turn around. And I think it looks to me, again, like pieces are falling in place for this market to gain. And don't be surprised if it turns around in a big way relatively soon. But again, what's the key? It's that 10-year yield. Let us move forward. Cryptocurrency is under some pressure right now. Gold and silver are under some pressure right now. Okay, so that's where we stand here, okay? In my view, there is no reason for you or me to deviate at all from our current strategy to attack the market, okay? All of it. With regard to precious metals, people embrace any dip that comes along. Again, this is my opinion. You can do what you want, because there's still a lot of people who are attacking me for explaining that people should be in anti-debt units of wealth. Oh, Greg is still pushing his gold and silver narrative. I don't understand. I really don't get it. If these kind of people could understand what's going on. Global debt is surging. There's no end in sight to it. It's a massive bubble beyond anyone's wildest dreams. I mean, it's not just a financial problem. I don't know another way to put this as well. The debt bubble is being inflated, for you people that are new here, by design, because it's going to burst. And when the debt bubble eventually bursts, it's going to change everything, and it's going to lead to a massive resource problem. Massive resource problem, and there's going to be pandemonium in the streets. It's actually the greatest threat to humankind. That's the debt bubble. Greater than war, greater than disease, greater than anything else. It's the debt bubble, which remains the greatest threat to human life on the planet. And they're inflating this debt bubble by design. They're hyperinflating it by design, because it's going to implode. And that's going to change the whole financial system, leading to a resource problem. And then, of course, a new system is going to be put in place here. As people are out in the streets, not knowing what to do with themselves, again, because this is going to lead to a credit freeze, no cash available out of your ATM, your bank accounts. This is, in my view, inevitable. It's going to happen. Something I've covered at length. And this is, seriously, from a financial standpoint, being on the opposite side of the trade of that debt bubble, it's the best place to be. I mean, forget about the stock market or anything else, really, for that matter. It's really going to come down to just an ocean of cash moving from one set of assets into another. It's going to bleed out of that debt market so fast when that debt market implosion occurs. It's going to melt the stock market. I'm telling you, I've been explaining to people, an 80% sell-off with regard to the S&P 500 is very real. It's absolutely very real. And this is why, you have to understand what you're doing, why you're in this market, all of the market, not just the equity markets, okay? When I say the market, I'm talking about everything. And you know how I am. I'm spread out across, risk-off assets and risk-on. Risk-off being physical gold, physical silver. I like platinum and palladium too. Silver is my favorite. I also believe, as always, and I'm going to keep saying it, I don't care how many people tell me I'm wrong on this, all right? Cryptocurrency. I believe you need to have some cryptocurrency in your portfolio. I'm not saying go all in on anything, okay? In my opinion, The market cap of cryptos is going to balloon when the implosion in the debt market occurs. And then when that happens, you're going to see cryptocurrencies skyrocket along with other assets. And then we're going to need to talk. Because again, we're not going to continue to hold on to these things in perpetuity. We're going to need to reevaluate our entire portfolio and what we're going to need to do. So I hope you stick around with me here after the implosion because we have a lot of work to do. We're going to have a lot to cover at that point. All right, look, before this video gets too darn long, stock futures are higher across the board, pointing towards a higher open, like I said. The 10-year yield remains the key. We must see financials or the banks start to play here for this to turn around. Looks like pieces are falling in place right now. Especially, there's a lot of insider buying going on. Just Google it or whatever search engine you use. I happen to know this firsthand. Okay, I talk to everybody. You all know that. There's a lot of cash going into this market here right now. People looking to get in on what appears to be, especially in the financials and the banks that are massively oversold. And the tech sector has gotten decimated, absolutely decimated. Tech sector as a whole, in my view, and in a lot of people's views that I talk to, is also massively, massively oversold. A lot of deals there. Anyway, that's the situation here, people. We know what to do. We know what to look at. And that's pretty much it. Anyway, just real quick, for those of you that tuned in to the Barrel Buddies last night, it was a great show. We had some technical problems with regard to the Wi-Fi, but all in all, I think it was a lot of fun. I hope those of you that joined in had a good time. All right, people, that's it. Love you a lot. Please share the video. Comment here. I want to hear from you. And, well, I'll see you at the end of the day, of course.